too. You gon' pop it too. Walk in that door.
All right.
No matter how much you've already achieved, you will desire to continue making accomplishments in the future.
Okay, there we go. So while we're waiting for other people to come in, I see Carla is from New Jersey. Howard, if you would like to tell us where you're from, that would be great. While I get started, Jerry, do you want to share your screen?
Yep, I'm working on that. All right, can you see it? Can you hear
Yes.
me? Okay,
Yes,
my name is Howard. Howard, I'm from Beaumont, Texas.
Hi,
Awesome.
Howard. Welcome. Glad to have you.
Thank you.
All right.
Thank you.
Awesome. Let's go ahead and get started. Hello, everyone. Welcome to our Wednesday night multifamily freedom chasers financing Zoom call. Sorry, I don't know why I mess that up all the time. My name is Shelley Miles. I'm an author and a commercial mortgage broker and the co-founder of our brokerage company called Adventure Commercial Capital together with Mr. Jerry Miles over there. You will hear from him in a little while. So what our company does, Adventure Commercial Capital, is connect real estate investors like yourself to lenders. And if you want to go to the next slide. While we wait for others to come in, we'll go ahead and start. So today's agenda, we're going to talk about our community ecosystem. We're going to do some introduction to tell you who we are, and we're going to give you an opportunity for you to tell us who you are. That's one good way of connecting with each other. We're going to talk about the current debt market update. We're going to talk about our main topic, which is agency loans, and then we're going to do a Q&A. Go ahead. So here is our community ecosystem. We have 4 calls that we do. We do an activation call, we do an asset management call, we do the multifamily financing call, which is us, and then we do a deal sourcing call. We only do it on 2 days a week, which is Monday and Wednesdays, and we do alternating Mondays and alternating Wednesdays. On Monday, which is next Monday, we are going to have these are the 3 guys here on your left that started this multifamily freedom chasers community. Their names are Marcel, Trevor, and Victor. Trevor is heading up all of this right now, and he does the calls on Monday nights. He brings on a celebrity guest that is currently doing multifamily and does a lot. So he gets you activated for the week with a celebrity speaker. Then the next alternating Monday, you have asset management with BB and Iffy. When you close a deal, what do you do next, right? The real work begins. Learn the fundamentals and explore real life scenarios, challenges, and solutions for multifamily operations. Then you have us on Wednesday. We do the multifamily financing part. You will get live updates on the current debt market, and you will learn what it takes to find and qualify for debt to take down big multifamily deals. Then you have underwriting on the alternating Wednesday with Kevin and Ed. You will learn how to engage with brokers, source deals, and underwrite them quickly and efficiently with Ed and Kevin. Now, all of us that are on this page right here, we are currently and actively in the multifamily space. BB and Iffy just bought 2 deals last year, and they're currently under contract for a couple deals right now. Ed and Kevin took down a deal a couple months ago, and they're doing great. And we do the financing part for the multifamilies, and Trevor, he's owned some multifamilies and done a lot of stuff. So next slide. So that's, let me share the link. Where's my chat? Sorry, bear with me. There's too many things going on my screen here. So if you're part of the, I see more people has joined. If you're part of the Multifamily Freedom Chasers and you've seen and you've been on any of our call, put a one in the chat so I can find the chat. Where's my chat? There it is. Got it. All right. If you've ever been on one of these calls, put a one in the chat. If this is your first time, put a two in the chat. Awesome. If you've never been on these calls, here's the link to our Facebook page. You'll have access to all the events, updates, and notifications. You can also plug into the Multifamily Freedom Chasers ecosystem on YouTube, Spotify, Facebook, Instagram, and WhatsApp. We will share that. I don't know why we don't have that QR code up front. We should put it up front, but that's okay. You'll have the QR code for the WhatsApp chat towards the end there. I think after Q&A. I'm not sure why we have it there. But there you go, take over,
All righty,
Jerry.
everyone, welcome. So we've had a few people join here, so that's good. We generally have around 20 people by this time in the call, so it's kind of a light crowd night, light numbers night. So and don't really.
I'm guessing it's back to school season and parents are worn out.
Maybe, maybe. So, who are the Miles? That's me and my lovely wife there, and our two boys. We are the co-founders of Adventure Commercial Capital. We lend on commercial real estate nationwide. We started this company about 4 years ago. We've been investors for about 10 years. We've run a commercial roofing company for the last 20 years. Roofing into buying houses to now lending is kind of how we've gotten to where we're at. We still have a rental. We still have a roofing company, and now we're working on growing our lending company here. So we started this company 4 years ago because we saw a need for brokers that had honesty and integrity. We had been working with different brokers, and we were having trouble finding people that were going to be honest with us and treat us fairly and all these things. They were all out just to make a quick fee on lending us the money, and then nothing after that. And so we decided to start this company, and it is our mission is to help real estate investors. We want to help real estate investors grow and grow their net worth and things. So looking to partner with you to help you do that. So that's a little bit about us. If anybody wants to introduce themselves and tell us a little bit about themselves, this is the time to do it. Raise your digital hand, and I'll unmute you, and you can come up and do that. It's important to let people know who you are. Howard, I think it was, said he was in Beaumont, Texas. I know a guy that owns several apartment complexes in Beaumont. He's been born and raised in Beaumont, and owns a big restoration company down there as well. So I've got connections to a lot of people all around Texas and Florida and different places, but we've had people that have met each other on this call and have done business together. So it's important to let people know who you are.
Hi there. I'm Kofi. I can't turn on my camera. I'm actually waiting for a client. I'm actually in the roofing sales myself, so it's great that you guys came from that background. Yeah,
awesome. What kind of roofing sales you do?
I'm actually fairly new to it. I was in IT project management, and now because I'm in Denver, we're pretty much working the hailstorms and the insurance claims out here. So
Gotcha. Okay.
it's new for me as well. But that's the active revenue. So I'm kind of looking at doing something passive. So I'm
Nice.
fairly new to multifamily as well. I met this group through Michael Blanc's.
Oh, nice.
Mhm.
Okay. Very cool. Very cool. Well, good to meet you, Kofi.
Yeah,
And
good to meet you too.
yeah, and good luck knocking them sales down, man.
Yeah, absolutely.
So we've done some of that through the years as well. Our company now mostly does commercial new construction, but we've done some of the restoration work and things as well. So all right, well, cool. Well, thanks, Kofi, for stepping up and introducing yourself. I'm gonna go
We
ahead
have
and
room for 2 more if you want to speak up, if you want to
Hi,
introduce yourself.
hi, this is Carla
hey,
Pollitt.
Carla.
I
Hi, Carla.
this is not my first time with you guys because I found you guys. I actually was on the underwriting with Kevin and Ed initially because I had started tackling underwriting just to get acclimated to this because I'm new into real estate investing and I felt better with understanding what a deal could be and understanding all of the ins and outs of it. So I started with them. And then when they told us who you were, I said, oh, well, let me join on this call too, because I know eventually I'm going to need to talk to commercial brokers.
Yeah,
So, yeah.
for sure. Yeah, I mean, it's important to understand the debt side of it. I mean,
Mhm,
apartment buildings, well, commercial real estate in general,
mhm.
their valuations are based on what you can borrow on them.
Right.
So it's important to understand this side of it. Um, and so it's good for you to be good for you to be here, and good to meet you, Carla.
Same here.
Glad to have you guys on here.
Yeah, and I'm gonna go ahead and move on to the current debt market update. Where are the current rates? The Fed rate right now is still at that 5.25 to 5.5. It's the highest federal funds rate in 22 years. The 10-year Treasury today was in that 3.8 range. The 5-year 3.65. That's down from the last time we did one of these calls. I think the 10-year was at 4.9 or 3.9, and the 5-year was at 3.8. So they're slowly coming down. The Treasury rates determine the rates we pay on long-term debt. So if we're looking at a short-term loan, like a bridge loan or a rehab loan of some kind, that's going to be based on, depending on where the bank is getting their money to lend to you on those. Sometimes it'll be SOFR, which is a standard, um, which is the overnight, exchange rate of money between the banks. Sometimes it'll be based on the Bank of America, rate. There's different ones. And when you hear it, you'll hear them say a lot of times, or you'll see the quotes. They'll say, it'll have a 5-year, a 10-year, 7-year option, sometimes a 3-year option, and it'll tell you what the treasuries are, and then it'll give you a spread. And that spread will be, anywhere from on long-term debt, anywhere from 1.5 points over the treasury to 3 points over the treasury. So if you're at 3.8 and you're 3 points over the 10-year treasury, you're going to be at 6.8. It would be your final rate. So we'll go into a little bit more of that here as we go on. I'm not going to show our current rates until we get on down the line here, since we're going to be talking about agency debt. So we've been, in a stagnant market over the last couple years since the rates have kicked up. In some ways we're seeing it starting to break free. The sellers, it's taken the sellers a while to come to the realization that their properties are not as valuable as they were. Let me try to find this sheet here. I'm going to try to find a sheet and just this sheet I showed last week, and I think it will help everyone understand kind of where the current market is. And why, the market is in pain right now. So can you all see my new page I have up? No? Okay.
No.
So I'm going to share this. Now, do you see my new page? Yep. Okay.
Yes.
So this is a property with an NOI, a net operating income of $500,000. This property here has if someone was to buy this property 3 years ago, they would have had a 3.5% interest rate. With a 3.5% interest rate, you could borrow $7.2 million on this property. And actually a $500,000 NOI, at a 4 cap, you would buy this, since you're getting an interest rate of 3.5, you'd buy this at a 4 cap. A 4 cap is $11 million. So this property 3 years ago with an NOI of 500,000 was worth $11 million. Today, this same property would get an interest rate of 6.5%. If you take that NOI of 500,000 divided by a cap rate of 7%, this property now is worth $7 million bucks. So when people are talking about pain in the market, this property right here, if someone had this loan coming due last year or this year, and they were needing to refinance it and get a loan of $7 million to pay off their previous loan, they're not going to be able to do it. And I'll show you kind of where it would be. 53%. So you'd be able to borrow 5.2 million on this same property that you were able to borrow 7.2 3 years ago. So it drops the value from 11 million down to 7.5 million. So when you're looking at properties, you're shopping and things, this right here is the pain in the market. And that's when you hear people talking about, oh, well, their debt's due. That's why they're selling. This right here is what you're looking for when you're buying a property. This here, if their debt is due, they would have to come up with $2 million in cash to be able to refinance this property. They wouldn't be able to just pay the higher rate. They would, if they had the $7 million loan on this property, their DSCR would be 0.91. They would be upside down every month. Every month they would have to pull money out of their pocket to pay the payment. Which if they had deep pockets, you would say, oh, well, that'll be fine. Well, most of the lenders and the banks are going to require them to keep a certain DSCR. The lender can actually foreclose on this property in a lot of situations because they're negative, because they're not maintaining their DSCR. They're required to by the bank. So when we're talking about here on this page, it says there's $2.7 trillion worth of debt maturing by 2027, $500 billion in 2024, $500 billion in 2025. That tells you that there is all these properties that are going to be going for sale, that are underwater, in other words. If someone has bought in the last 5 years, chances are, they're in some pain. So I took a little bit of a detour on what I was going to talk about, but hopefully that little scenario helps everybody understand. We get calls from people every day that are in this situation. Oh, well, I owe 8 million and I need to refinance my $8 million loan. And I look at it and I'm like, well, the most I can get you is 5 million, or the most we can get you is 6 million. Do you have 2 million in cash? And the answer is no. So these people are going to be forced into selling, and then there's going to be the people that have invested money in the deals are going to be losing out. So coming on into the main topic of agency financing. Everybody's heard of Freddie Mac and Fannie Mae. They are mission-driven organizations. Their mission is to provide affordable housing, or affordable workforce housing is their mission. They're supposed to be here to help create affordable housing, housing that people can afford to live in, whether it's apartments, they do single family loans and all that as well. But they're here, we're going to be talking about their multifamily loans. Freddie and Fannie both have programs, what they call the SBL, or small balance loans, which is a loan amount of 2 million to 7.5 on Freddie, 2 million to 6 million on Fannie. Deals above 1 million and below 2 million can be done, but will be more expensive. But they each have a conventional program as well that can go beyond $100 million. So if you have a property, we'll go into some of the details. But I'll just show you the rates here, the current rates. I think this is Freddie Mac. This is the SBL program, small balance loans. The rates are looking good. I mean, that same scenario I showed you, if we get to a 5.5% interest rate, that looks a little better. 3 weeks ago, 4 weeks ago, we was at that 6.5. Now we're, down around 5.5. Still, it's a far cry from the, it's still quite a ways off from the 3.5 that they would have had, 2 years ago. So when you jump up over the 7.5 million, it gets, the rates get a little better. And then the conventional program. Here's the Fannie Mae. Fannie Mae's a little bit higher interest rate wise. We'll talk about some of the differences between the two here in some upcoming slides. So agency financing, the differences in going Freddie versus Fannie. Fannie performs better in smaller markets. Freddie performs better in larger markets. There's different things and different nuances between the two. For a while there, Fannie wasn't locking in rates. Freddie was. Freddie wasn't, lending anything on, mixed use properties. I think they are now. Freddie was, or, vice versa. I'm not sure. Freddie will lend a little bit more on student housing than Fannie. Just different things, different areas that they like. Essentially, the underwriting is the same for each, and the general criteria is the same for each. The biggest changes is, what properties they like and what properties they're looking at, and willing to lend on. So. Criteria for properties. Properties need to be stabilized. 90% occupancy or better for a running 3 months. Now, there is something to understand about agency financing, Freddie and Fannie, is that it is very fluid. When we say 90% occupancy or better for 3 months, there are exceptions to that. One being, if you're in an area, I know there's certain places in the country that have lower occupancies than others. If you're Houston, I know is one that has kind of a average lower occupancy rate. I think they're like 84 or 85%, Houston is. And we can do agency loans in Houston if we're if we're in that 85, 84% range, as long as the neighborhood and the area and things like that, that's the average. So as long as we're kind of sticking to what that average is in the area, we can make it fly. So, property condition inspections will have to be done when we're looking at agency debt as well. Of course, appraisals, all that stuff. Borrower's qualifications. So I know probably most of the people on here, you guys have heard different gurus and things that talk on social media and talk about, oh, I'll teach you how to buy property with no credit, no money, and all these things. If you are buying commercial real estate in general, you have to, someone on the team has to qualify financially for that. There's net worth requirements, experience requirements, all these things. With agency financing and most commercial real estate financing, borrowers need to have a net worth, or the signers on the debt need to have a net worth equal to or greater than the loan amount. So if you have a $2 million loan or a $10 million loan, you need to show that net worth or better. That net worth can be spread between a couple of different partners. If there's 3 people that each have $1.5 million net worth, you're trying to buy something, you need $4 million loan, you can make it work with 3 people. So experience is key when we're looking at agency financing. You're not going to be able to go in, let's say you've got a high net worth because you have a business that is performing well, you have some good value there, and now maybe you've got a $10 million net worth, you want to buy a 100-unit property, taking out a loan of $5 million, $6 million bucks. They're going to look and they're say, oh, I like your net worth, but where's your experience? Sometimes you can get away with it if you have a good net worth and things, where you say, oh, well, I've got a good property manager, and your property manager is going to, make the lender feel more comfortable. Sometimes we can get those things through, but someone's going to need to be there with, some experience, whether it's a manager or a partner or something. Agency with financing, if you're buying an apartment building, you live in California and you're buying one, I don't know, in Des Moines, Iowa, they're going to want to have some boots on the ground. Somebody's going to need to be on the team that's local, especially on a first one. Once you get that first one under your belt and you've shown yourself to be able to do it, they're going to be a little more lenient on those things. Like I said, strong management or a third party, with the experience. Something else I didn't list out here is there's credit requirements as well. They're going to look at, want to see a 660 credit score or better. Hey, I see Andrea. How you doing, Andrea? So agency financing, prepayment penalties, yield maintenance is where you will see most of the time when you get a quote from somebody on a Freddie or a Fannie loan. They're going to have prepayment penalty, and it'll be yield maintenance. So what yield maintenance is, if it can get expensive. So when someone is taking out a 5-year note on it's amortized 30 years, you got a 5-year term on your interest rate, you'll pull the treasury, they'll use the treasury rates to determine your rate. People are buying these treasury bonds to get that rate of return for 5 years. Is why they buy a 5-year treasury note or whatever. They're going to expect to get that interest rate through the life of that 5 years. So if someone sells a property that note is helped fund, and they go to a lower rate, that money still has to come from somewhere. So it'll come from the yield maintenance, and they're going to figure out what it was that was going to pay up that investor on that loan. And that's where yield maintenance comes from. Sometimes if the rates have gone up way high, or so if the rates have gone up and they're going to get a better return, you shouldn't have a yield maintenance. But if rates have gone down, then you're gonna have some yield maintenance kicking in. You can also have what is called a step down, where it'll be, on a 5-year term, you'll have a 5% the first year, 4, 3, 2, 1, 1% on the last year of prepayment. So those are some of the different prepayment options. So that has been agency financing. There's a lot more to it. We'll give everybody a chance here to ask questions in a little while. But why use agency? Very favorable rates and terms. There's nowhere else that you'll get the rates and terms that agency's giving out right now. It's non-recourse, and there is no limits really as far as the amounts. When you're going up, you get over that 1 million mark, there's really no limits, and no caps. I have customers that have been to local banks for years and used local banks to buy apartments, and they hit that $11 million, $15 million, whatever it is, that local bank says, oh, that's where we're going to cap one customer, and it stops them and they can't borrow anymore. Well, agency lenders are going to continue to lend to you. There's no cap on the amount that you can borrow through agency as an owner. Yeah, I mean, the agency, they're giving out, Freddie and Fannie they have a budget of money and a surplus of money that they're going to lend out every year on apartments. There's been years in the past where, June, July, August hits and all of the agency money is used up. And then you have people just starting to sign up, waiting for refinances and things like that. And they're holding off till the next year when the money supply renews. But the last couple years, they haven't used all the money each year because there's just not a lot of activity going on, and as far as new loans and things. So it's what's going to happen to that surplus money, I'm not sure. I'm guessing it just gets rolled over to the next year. But right now they are aggressively trying to get deals, but they're cautious at the same time because they don't want to be caught holding the bag. So but I will go on to Q&A. If anybody has questions, feel free to ask. And as anybody has questions come up, I'm going to go ahead and roll through the other slides. Things that we need for a quote. If somebody has something they're wanting us to look at, T12 and rent roll. The T12 is just the trailing 12 of income and expenses. It's an income and expense report. The OM, or the offering memorandum, is the sales pitch that the brokers will have. And I don't know if y'all can hear our dog, but our dog's going nuts here in the house right now. So I apologize if that's in the background making noise. But,
Yeah, there's a couple questions in the chat that I was about to read. The dog started barking.
okay. Yeah, go ahead.
We got Andrea. She said, Hi, Jerry Shelley. Appreciate the info about Fannie versus Freddie. How familiar are you guys with the rate lock process, timing? Also, do you know any IR cap consultants?
So as far as
You-
rate cap, like to protect against the rates going up again, is that what you're looking at? You know,
Yes.
I'm not real familiar with those. That's stuff that we would get into as we you're signing in, signing up with the signing an LOI with the lender. We'd start talking about those things. Um, and that's really not a conversation I get into a whole lot. It's usually between the borrower and the underwriting team with the lender. And that's not usually something that we're involved with too much. But I can ask questions about it if you have something in particular you want to know. I can always reach out to some of the underwriters and things and find out what what they've got going with that stuff. And then you ask something else as well. Do you want to just ask it or?
Can you guys hear me?
Yes.
Oh, great. I know it sounds not ideal to drive and talk, but I do it all the time.
Yeah.
Hope you guys are doing great. I appreciate all the info.
Yeah.
So I want to ask you, whenever we are at the best and final with the LOI, I want to, with the offer that we're putting in for the property, and we want to do agency financing because the property qualifies. I'm worried about timing in terms of rate locking and making sure that everything goes smoothly. So, in terms of like timing for due diligence, do you recommend putting in a physical financing contingency if we are going to go through the agency route?
Definitely. In a perfect world, an agency loan should take about 60 days. And so, I mean, they can take much longer. I know,
Are you aware of how many basis points? Like, have you seen a big change in basis points going up or down between the time that we get the quote versus when we lock it in?
right now I think we're on the good side of it. They've been inching down just about week by week right now. They've not, I mean, we had a little while there back in the spring where they were really jumping around. But here lately, I mean, there's a lot of talk about the rates coming down, and I think when some of the real numbers start coming out of like the labor numbers and things like that, I think we're going to come down even more. Because the labor numbers and things have, I mean, they've been fudged and fudged and fudged, each time they report. And then the next month, you can look back at what they reported from the previous month and then what the actuals were. And they're so far off from each other. And it's almost on purpose. They're wanting to hold up the economy. But as these numbers and things just continue coming out, I think rates are going to keep coming down a little bit. So as far as, yeah, I have seen, where people have gone under contract and then the rates jump up a little bit and it kills the deal. That happens. If the seller is a real seller and they're really selling, they're going to have to understand that, hey, we're wanting to buy at this, we have to be at this leverage to be able to buy it, and then if the rates come up a little bit, it's going to change the DSCR. It's going to change, what you're able to borrow. And then you just got to go back and say, hey, look, I don't like retrading. I'm not really going to call this a retrade, but we were trying to be 65% leveraged and now we're going to be 60% leveraged. So we need to do something, and you or anybody else buying it are going to be in that same situation. And and you protecting yourself at the beginning, you know, you might lose out on that contract at the beginning. But I've seen a few people that I've talked to that the contract comes back to them because the broker's like, hey, you know, this guy didn't follow through with what he was doing or whatever, and now they're back to the other guy. You know, that it's always better to cover your bases and things at the beginning. You know, I mean, that's my opinion. Different ones will say, hey, you know, Grant Cardone, we're in all his meetings and stuff because we're in his real estate club. He's always saying, hey, you got to impregnate the seller. You got to get them thinking that you're, you know, that you're ready to have a baby with them and all this. And he said, and, you know, and just, you know, pretty much tell them what they want to hear to get them to sign, and then you can trade later. You know, I mean, that works for some people, but you know, if you want to buy from that person or that broker again, it might not work so well, you know. So I hope that helps.
Yeah, it definitely helps a lot. Just as we're being candid here, I actually do want to ask you your opinion and what your experience is in terms of working. Let's say if I do have a few capital partners. I have the experience as an individual being in multifamily for over 7 years, but my team is not as experienced as I am. Does the lender take that into consideration, or do they want the whole team to have the experience in the background?
No, I mean, if there's someone there that can sign on the loan, or someone a part of the team that has the experience, you know, maybe, I mean, I know your partners. I mean, they aren't no slouches. They, you know, are financially good and all those things. As long as someone on the team has experience, you're good. Not everybody has to have experience. So, yep.
Right. Thank you, Jerry.
Yeah, for sure.
All right, we've got a question in the chat from Kofi. He said, what are the requirements of the key principal?
Oh, as far as like the lender's requirements, or like what will a key principal require to come and sign on your loan?
Yeah, I was definitely referring to from a lender's standpoint. So
Okay.
yeah, when they're looking at a key principal, what are the things that they want to see?
Experience, net worth. That's what they want to see. So the key principal, you know, if you're talking to somebody and you know they've bought properties, they've done all the things, you know, ask them, say, hey, how much debt are you able to sign on to? And that'll tell you what their net worth is. And you know, they'll know that number because it's going to be on their personal financial statement, and they're going to know how much they can qualify for.
Okay.
So yeah.
And how involved? Because I know that there's some guys who like professionally do this, right? They're professional KPs. So how involved in the team do they have to be? Do they have the signers on the loan, or?
Yeah, that varies person to person.
Hmm.
You know, you'll have I know one guy in particular that does a lot of them and has been doing a lot of them, but he likes to be really involved. And I mean, really, if you have a guy is signing on the debt, they do have the experience. You know, sometimes it's good to have them involved. You know, but I know others that, you know, kind of like to do it passively. You know, but most of them are going to want to have some kind of involvement just because it's their neck on the line.
Mm-hmm.
But you know, it's a person to person thing.
But from the bank standpoint, what is their like minimum involvement?
I mean, the bank will let you know as you're coming up. I tell people don't go starting LLCs to hold properties in and all these things, because when you're coming up to a deal closing, the bank that's lending the money is going to tell you how they want everything structured.
Mm,
They're going to tell you, and they're going to look at, I mean, generally you're going to have everything put together. The KP that's done it over and over again is already going to have an idea on what they want. And they're going to put it out there and say, hey, this is what I want. The lender's going to look at all these docs. They're going to have a team of lawyers looking at them. And if they're uncomfortable with any aspect of it, they're going to tell you how they want things changed, how they want things listed, you know, all those types of things. So, and that changes situation, deal to deal, partner situation to partner situation, depending on how strong the rest of the team is, you know, those types of things. So,
thank you for that.
and so we were talking about the requirements for experience and requirements for personal net worth and things. Before we sign an LOI with a lender, you know, we've got to be able to show a schedule of real estate owned and a personal financial statement of the KP. So those are all things that are needed as you move forward. The SREO, PFS, I don't need those to get you a quote. But the T12, rent roll, OM, a summary of what you plan to do with the property. I've had a lot of people send me a T12 or a rent roll, and that's all I get without anything in the email, or just a little say, hey, can you quote this? And I'll look at it, and a T12 or rent roll don't even have an address on them. So I don't even know where they're located. I don't know, you know, anything about the deal. So give me a summary, a little bit about it when you send it. So what can you do today to be ready? I think most people that are on here, you know, everybody wants to be involved in real estate somehow, but I mean, really, I would say it's probably everybody's goal to eventually be that person that can sign on the debt. So make sure your credit is in order. Start working now on your PFS and SREO. Even if the SREO is just single families, you need to list them out. That's part of your net worth and your experience. I see your raised hand. Go ahead.
Someone said, could a hired property manager serve in place as an experienced person if everyone is new to commercial multifamily?
Certain occasions, yeah. I mean, is this property manager going to be a part owner? I mean, that's the big question. A lot. I mean, you need them to be on the team. You know, there's like I said, agency finance is you know, fluid. You know, if the lender looks at it and they're comfortable with it, you know, they can make it work. So, get your bio together, work on raising capital or making more money. You know, if you have a business, work on that business and make more money in the business so you can put more money into real estate. We also have a referral program. If you're connected with real estate investors and you can connect them with us, we can pay referral fees. This week's verse, we do a verse every week, is Isaiah 40:29-31. He gives power to the weak, and to those who have no might, he increases strength. Even the youth shall faint and be weary, and the young man shall utterly fall. But those who wait on the Lord shall renew your strength. They shall mount up with wings like eagles, and they shall run and not be weary, and walk and not be faint. Okay, our next call is September 4th. And did we have a
No, sorry, September 4th is going to be canceled. Our next call is going to be September 18th.
oh, okay. Okay, so
So September 4th, we don't usually cancel these meetings, but this is one we're gonna cancel. Jerry's gonna be out of town and I'm gonna be here with my mom, so it's not gonna be easy with him not being here. So September 4th is canceled. Our next call will be on September 18th, which is a month from now. Andrea said in the chat, thank you guys for your service and info. I will send you over my SREO next time. Jerry, sorry I forgot that last time.
That's all right, Andrea.
All right. Oh, go to the next slide.
This is for the WhatsApp chat, Freedom Chasers WhatsApp chat. I heard
Yeah,
some,
go ahead and scan that QR code and join our WhatsApp chat. You can speak to anybody in there. I'll give you 5 seconds to pull your phones out and scan it.
and just so y'all know, Michael Blank is in the WhatsApp chat with the Freedom Chasers, so he's active in there. I've seen him post in there before. So I heard somebody mention him earlier.
Go ahead and switch.
And this is our contact info. That is a QR code from my Hi Hello card. That's my cell phone number, and that is my and Shelly's email addresses.
And while you have it on there, I'm gonna give an announcement here. Monday is the activation Zoom. They are having Keely Hubbard on there. And where's my text? Okay. Keely Hubbard is going to be on there, and she's going to be talking about raising millions in the time of economic uncertainty. So that's going to be a great one to join, guys. So go ahead and sign up for that Facebook community, and you will get all the links and notifications to that. I will share that link again if you haven't grabbed it. And you can go to the next one. And here is our community ecosystem. Monday nights is, this Monday actually is Trevor with Activation Zoom with Keely Hubbard. Then you have next Monday will be BB and Iffy, then us tonight. Next Wednesday is going to be Ed and Kevin. The Wednesday after that, I don't think there's going to be any Zoom calls. And then that's it. Thank you all for joining. Have a great night. I will leave you with some music. Let's see if this plays this time.
I don't hear anything.
You don't hear my music? How about now?
You gotta share your screen for it.
When I walk through the door, I'm talking cash flow. And if you know, like I know, you're getting cash flow. Rule one, getting money, never losing no. But I'm broke, but now.
I don't know why it's not playing. It's playing here, and I do it the same way every
Yeah.
time.
I know I saw you giving the head bob, so I figured it was playing it.
I don't know, guys.
Well, we've only got 2 on here, and
Yeah, have a great night.
all right.